Welcome back to the channel. We brought you very crucial info. We respectfully ask you to stay with us until the end of the video. I will announce the topic first. President Biden imposes stricter sanctions on Russia amid Ukraine crisis. U.S. stock market stumbles amid mounting concerns over Ukraine conflict. Unprecedented surge, oil prices reach record highs amid global supply concerns. Let's move on to the detailed news. President Biden imposes stricter sanctions on Russia amid Ukraine crisis. United States takes decisive action to hold Russia accountable, global economic implications loom. In a resolute response to the ongoing invasion of Ukraine, President Joe Biden announced a comprehensive set of new sanctions against Russia on Tuesday, February 24, 2022. With the aim of exerting pressure on President Vladimir Putin and his regime, the sanctions specifically target the Russian economy and its leadership. Financial sanctions. The United States will effectively restrict Russia's central bank from accessing the U.S. financial system, rendering international transactions arduous and potentially leading to a devaluation of the ruble. Export controls. Stringent export controls will be imposed on Russia, preventing the importation of crucial technologies, including semiconductors and software. These measures will impede Russia's ability to produce goods and services, including military equipment. Sanctions on individuals and entities. A range of Russian individuals and entities, spanning banks, companies, and government officials, will face targeted sanctions. These punitive measures will freeze assets and prohibit business transactions with U.S. companies. In tandem with these robust sanctions, the United States is actively collaborating with its allies to impose further punitive measures on Russia. Notably, the European Union has already imposed sanctions on Russia's central bank and restricted Russian airlines from traversing its airspace. The Biden administration has emphasized that these sanctions represent just the initial step in a broader endeavor to hold Russia accountable for its aggression in Ukraine. The administration remains steadfast in its commitment to imposing additional sanctions should Russia fail to alter its course. The economic repercussions of the sanctions are projected to be substantial, with the ruble already experiencing a sharp decline in value and the Russian stock market witnessing a precipitous crash. Moreover, the sanctions are expected to cause shortages of essential goods and services within Russia. On a global scale, the sanctions are likely to reverberate throughout the economy. The price of oil, which has surged since the onset of the Ukraine crisis, is expected to be further affected by these measures. Consequently, consumers worldwide may face higher prices for various commodities. Russia has vehemently condemned the sanctions, labeling them as unprecedented and unjustified. President Putin has characterized the sanctions as an act of war and vowed to retaliate in a commensurate manner. Internally, the United States has witnessed some dissenting voices questioning the efficacy of the sanctions. Critics argue that they may not be sufficient to compel President Putin to alter his behavior and may inadvertently exacerbate the suffering of the Ukrainian people. Despite these concerns, the Biden administration remains resolute in its commitment to implement and enforce the sanctions. Additionally, the administration is actively collaborating with its allies to provide humanitarian assistance to Ukraine, underscoring its dedication to mitigating the impact of the crisis. As the situation unfolds, the global community closely watches the ramifications of the stringent measures imposed on Russia. The efficacy of the sanctions, their geopolitical implications, and the potential for further escalations remain key areas of concern and debate. Stay tuned for more updates on this rapidly evolving crisis. Like, share, and subscribe to our channel to stay informed about the latest developments in international affairs. Together, let us strive for a more peaceful and just world. Let's move on to the other info. U.S. stock market stumbles amid mounting concerns over Ukraine conflict. Global tensions weigh heavily on investor confidence. Tech and consumer sectors bear the brunt. In a tumultuous session marked by escalating anxiety, the U.S. stock market experienced a significant downturn on Wednesday, November 29, 2023. With mounting apprehensions surrounding the ongoing war in Ukraine and its potential ramifications on the global economy, investor sentiment took a hit, resulting in notable losses across major indices. The Dow Jones Industrial Average dropped by 2%, the S&P 500 declined by 2.32%, and the Nasdaq Composite experienced a substantial 2.87% decrease. The market decline can be attributed to a convergence of factors that have contributed to heightened investor jitters, including persistent conflict in Ukraine. The protracted war in Ukraine, now extending into its 10th month, continues to send shockwaves across the globe. Disruptions in global supply chains, surging energy prices, and fears of a wider conflict have all fueled investor apprehension. Economic ambiguity. The Ukrainian conflict has cast a shadow of uncertainty over the global economy. Concerns abound regarding the potential onset of a recession, as mounting inflation and rising interest rates threaten to dampen economic growth. Federal Reserve anxieties. With the aim of curbing inflation, the Federal Reserve is expected to persist with interest rate hikes. However, investors fear that overly aggressive rate increases could inadvertently tip the economy into a recession. The market downturn was widespread, affecting all three major indices, each witnessing drops exceeding 2%. Nevertheless, specific sectors bore the brunt of the decline, notably technology. The technology sector experienced significant losses, with the Nasdaq Composite plunging by nearly 3%. Investors harbor concerns about potential declines in tech spending as inflation and interest rates continue to climb. Consumer discretionary. Wednesday saw a sharp decline in the consumer discretionary sector, as worries surrounding the impact of inflation on consumer spending took hold. Financials. The financial sector also faced a downturn, as investors grappled with the potential consequences of rising interest rates on bank profitability. The future trajectory of the stock market remains uncertain, as investors contend with a multitude of challenges. The protracted Ukrainian conflict, inflationary pressures, escalating interest rates, and the specter of a looming recession collectively undermine investor confidence. Market analysts offer divergent perspectives on the short-term outlook for the stock market. Some anticipate an impending correction, while others believe that the market has already priced in much of the negative news. In the near term, volatility is expected to persist in the stock market, remarked one analyst. Investors should brace themselves for a tumultuous journey. Another analyst commented, while the market is poised for long-term recovery, short-term challenges may still lie ahead. In other news, unprecedented surge, oil prices reach record highs amid global supply concerns. Escalating geopolitical tensions and disrupted supply chains drive unrelenting oil price rally. The relentless climb of oil prices shows no signs of abating as it reached an astonishing $118 per barrel on Wednesday, November 29, 2023, marking an unprecedented all-time high. This relentless surge is primarily attributed to mounting anxiety surrounding global supply disruptions and the ongoing war in Ukraine, sending shockwaves through the energy market. Disrupted supply chains. The protracted war in Ukraine has severely disrupted global energy supply chains, hindering the smooth flow of crude oil from Russia, a key oil exporter. This disruption compounds the existing bottlenecks in supply chains caused by the lingering impact of the COVID-19 pandemic. With economies gradually reopening and business activities resuming, the demand for oil is experiencing a steady resurgence. This surge in demand, coupled with constrained supply, has propelled oil prices to unprecedented levels. The Organization of the Petroleum Exporting Countries, OPEC, and its allies, collectively known as OPEC+, have remained cautious in their approach to increasing oil production, exacerbating the strain on supplies. Heightened tensions in the Middle East and North Africa have also contributed to market volatility and uncertainty, further exerting upward pressure on oil prices. Consumers are bearing the brunt of the oil price rally, with gasoline prices skyrocketing at the pumps. The surge in transportation costs is straining household budgets and exacerbating inflationary pressures. Businesses are grappling with soaring energy costs, which are directly impacting production, transportation, and overall operational expenses. These elevated costs have the potential to translate into higher prices for goods and services. Businesses are grappling with soaring energy costs, which are directly impacting production, transportation, and overall operational expenses. These elevated costs have the potential to translate into higher prices for goods and services. The outlook for oil prices remains shrouded in uncertainty, with several influential factors shaping the market landscape. Ukraine-Russia negotiations. Progress in resolving the war in Ukraine could alleviate supply concerns and potentially stabilize oil prices. The pace of global economic growth will play a pivotal role in determining oil demand, thereby impacting price fluctuations. OPEC Plus production decisions. OPEC Plus's decisions on oil production will continue to exert significant influence on the supply side of the equation. Geopolitical developments. Emerging geopolitical tensions in oil-producing regions have the potential to further disrupt supplies and exert upward pressure on prices. In conclusion, the unrelenting rally in oil prices presents a multifaceted challenge with profound implications for consumers, businesses, and the global economy. As events unfold in Ukraine and global energy dynamics continue to evolve, the trajectory of oil prices remains uncertain. Stay informed and subscribe to our channel for the latest updates on this critical market development. These were the stories we had available at the moment. More information will be provided in a few hours. Remember to subscribe in the meantime.